Good afternoon, everyone. It is October 10th, 2020, on a beautiful Saturday morning here in Houston, Texas. My name is Faisal. Y'all already know the rundown of these videos. I'm basically going to go over just some of the things that happened last week, how I positioned myself, and what I kind of expect to happen this upcoming week. Just to start off, it was a really different week than what I was expecting coming into this week. Sunday, I think I'd mentioned that I thought that the market was setting itself up to really have an ugly day Monday. And let me go ahead and take a look at SPY real quick. So Monday, I think we had what was it? It was on the so it was on the second, fifth. Okay, so yeah, so it looked like we were trying to you know, went up there. We were kind of at some sort of resistance level over here, and we actually went down just on the first day on Friday. And it was looking like it was probably going to continue, but then we had a really strong open Monday, and then it continued throughout the day, and then Tuesday it was shaping up to be another strong day, and then we got that word late Tuesday that there was going to be no stimulus deal before the election, and then the market tanked. But uh, if you guys were reading my post, the selling actually wasn't that bad on that Tuesday, and I had advised people to like just slow down a little bit because even though it may seem like a time to short because the notion that stimulus and everything was pumping up this market, and now that we were not getting it, it was going to be at risk of pulling back. The initial selling was not bad at all, and a lot of stocks and leaders held their support levels, short-term support levels, and um, even though they bounced back hard the next day, I was very surprised to see them um, bounce back at the level that they did. Granted, it was just, it seemed like an unbelievable day Wednesday when you had stocks like Fastly. I think that was the day Fastly went up like 20%. Yeah, Fastly went up 20%. Peloton went up 20%. And Wednesday late was when I myself really went short heavy. I thought that this was indicative of just complete over complacency because even though late Tuesday we got word that we were not going to have that stimulus deal, Wednesday morning, I believe Trump came out and said that we could have a partial deal as far as PPP loans, airline bailouts, and stimulus checks. And for a stock like Fastly to go up 20% on news like that, and obviously it's not directly correlated. The market momentum seemed to have done a lot about that, but for the market to really value that um, and take it up beyond levels that it sold off when we found out that we weren't getting a full stimulus package, it was very, very surprising to me, and ultimately I've felt comfortable shorting a lot. So far, it's been it's not been the best move. Some of my shorts did well this week, like Penn was a really nice short. Um, throughout the week from the beginning of the week, and that's probably due to the fact that COVID is spiking up in the NFL games, and there's increasing risk for more games to be shut down, and I think that deters the overall online gambling population from making big bets or anything like that. DraftKings also went through the same type of thing this week too, but I think they offered shares, so there was a lot more in that stock. But once again, got killed 25% in 1 week, which is insane. But the stock is up big, so I guess it's not too bad. But anyways, for the most part, my shorts are still predominantly in the tech area. I added MongoDB, which is I think like I literally am down like 10% on this one. I can't remember which day I shorted it, maybe last Friday or something like that. But this is one of my newer shorts. I still believe that this company has probably the least big moat. Like that, there is no moat for this company at all, and I think it is completely replaceable within the next 2 to 3 years, just the way that cloud technology is going. And I'm not very high on this stock. I really think it's not a fast grower. As you can see, the EPS growth has been really stagnant lately. You got good revenue growth, but now you're seeing it come down. In 2019 it was 70%. Now dripped down to 60 in late 2019. It was 50, and now we get to the point where it's starting to be 30%, 40%. So the growth rate is starting to tail off a bit, and I still think, just based on the technology and some of the developer friends that I've talked to, MongoDB is um, one of the companies that is most susceptible to be replaced as far as their technology. So I'm really not high on them, but they had a great week, and so did the rest of the high growth stocks. But I'm not really too worried about my tech shorts. I actually feel perfectly fine, even though they had a nice week. Tesla's another one that I've had for quite a bit. It had a nice week this week, 4%. I'm really not too worried about any of these guys. Um, as you could see right here, this type of basing pattern, it could be considered a basing pattern or a topping pattern. Up here it was a basing pattern for another move up, and we could see that happen once again. But ultimately, I think just the signs that we've gotten from things like Fastly, Peloton, the logic seems to not fit the prices. And I think when that happens, you have to be not only cautious if you're a bull, because you could totally be a bull at this stage. And I think it's more wise to be a bull and not short the market, considering, that's where the short-term momentum is. And you're seeing a lot of broad leadership um, make all-time highs, but we'll get into that in a little bit. For the most part, I feel good about my tech shorts. The only short that I am considering about getting rid of is my silver short. Now, I've had this one for a while. I got in at 22.8. It was really losing me a lot of money for a long time, and then had that big collapsed week. I think when the dollar rose just a little bit, um, and yeah, this week right here. And so I'm trying to figure out what to do with it. I still think it's a very overinflated asset. There's still a lot of, I think it's a very overcrowded asset that could come down a little bit more. But once again, this also ties really well to the dollar. And I think just based on what I saw from the dollar this week, it was really discouraging, not only from the momentum of the dollar perspective, but also for the commodities perspective, because if the dollar starts to break down and sell off, that is really not good for my silver short or any type of that's really good. That's really bullish for materials in general. And as you can see, I believe XLB was the best performing sector this week. Yeah, I think they were the best performing sector. I think utilities maybe. Yeah, barely. XLB was up 5%, and that makes sense because the dollar really seemed to break down below key levels that it seemed to be holding last week. So Friday, you got this really kind of serious gap down. As you can see, let me do 10 minutes a bit, give a more time span. Okay. So, there was this consolidation since October 5th, the beginning of the week, and then towards Friday, you just got this huge drop down, and that's when you had a lot of the commodities and materials do really well. So anyways, that's the only short that I'm really worried about. I'm not too worried about my tech shorts. I think at some point they will pay out. I do have my contingency plans, but they're a lot looser to follow than I normally would, because I just think the risk is so high for these companies. It just feels like price and logic and value do not mix well at all. Fastly move to the upside was just another one. There are a lot of things in the growth sector that seem to not make sense, but ultimately, that's where the momentum is. But when the music does stop, just like we got in early September, late October, where we got that 10% sell off in 3 days, you could have something to that degree or even worse, because this is just the market that we're in. That's why you can get 10% in a week from individual assets. Like Fastly went up how much this week? 32% this week. MongoDB went up 10% this week. Peloton went up 14% this week. So it's not out of the realm for not only growth stocks, but tech in general to fall back, 8 to 12% within a week or 2 weeks, because look at the upside volatility. It's insane. And if there's one thing I've learned from trading this market for a long time, it's that the downside volatility in every market period is always more volatile than the upside. And granted, I've never seen an upside volatility cycle this strong, but just we already got hints of it in early September. a 10% correction in 3 days. That had never happened before in the history, but that wasn't really surprising because we were also getting just the week before that, or 2 weeks before that, we were getting stocks that rallied 10%, 20% in 2 weeks. So once again, be wary of the type of market we're in. You can make a lot of money in a short amount of time if you're a bull, but ultimately, it's it's just I think it's a week by week thing. You kind of have to uh, really hope that the market doesn't turn your way at that moment. And the first day it does, it's probably best to get out the first negative day um, that you see where there's high selling, high growth stocks um, start to sell off. 7, 8, 12%. I remember on that 10% correction, we saw Coop go down, I think, like 15, 16% in a day or something like that. Let me go ahead and check that out real quick. I mean, let's just see the weekly. So you had to go from 353 to 270. That's a 70-point move. That's a more than 20%, I believe. So I mean, that's more than 20% in a week for a high growth asset leader like Coop. Once again, that's still in the play for the market as we continue to see this highly upside volatile cycles in many of the leaders. Okay, so another thing that I also wanted to talk about today was just how good of a week this was. And I know I'm on the short side, and I I like to think I don't have a bias when I have a leg in the market, whether it's being short or long, but I can really view the market in an unbiased manner. And just from my perspective, it was such a powerful, strong week. And I was telling people, I think Thursday or so, I was like, I really wouldn't be short this market if you can't be active. Like, if you're someone who's betting on the downfall of the economy and thinks that it's going to happen at some point, but you're kind of a passive investor, you're not a trader, I would not be doing that. I would not be shorting the market or buying puts on the market at this stage, at least. Obviously you can buy it for really long out. I don't know how the premiums are for long-term puts, but you know, it's just the individual factors, whether you're talking about leadership, risk appetite, risk sentiment, they all look amazing. So let's go ahead and look at the two factors that I look at that are some of the biggest signs as to whether or not this market wants to go up or down, which is what is the risk appetite slash sentiment looking like, and what are the leadership stocks doing across the market. So for the risk appetite side, how I try and determine that is I look at two categories: the deep value side and the high growth side. So both of them I consider high risk assets because, one, deep value has deep problems. They're the ones that the airlines that are still facing demand problems, oil that's still facing demand problems, financials that are facing long-term low interest rate problems, and also constricted loan problems, probably for the foreseeable future, bankruptcy problems. You have all these deep value sectors and stocks um, that are that inherently have a lot of risk, even as the market continues to go up. And so I put them in their own high risk category because you could say to yourself, well, most of the risk has been priced in at this stage. These stocks have bottomed for long enough. And if the economy is continuing to go up, just like all the other stocks are, then at some point these value stocks have to be okay, right? And so that's how I kind of place them in that risk appetite segment. That's just one half. Now the other half is the high growth stocks, and they're always high risk asset because they will always trade at a premium relative to other sectors of the market because they're growing a lot faster. But ultimately that growth um, comes at a price. It comes at a high risk because, let's just say, for instance, one quarter where the company doesn't grow or doesn't meet the very high standards that it's expected, you'll see that company fall 10, 15, 20%, a lot more than if you saw a company like Procter and Gamble miss their company earnings. Even if these high growth companies miss it by a little bit, it's taken as a big warning sign sometimes, and that in turn makes them very highly risky. It's not only in terms of earnings, because as we've seen, they're very volatile, and um, that volatility also plays into how I view them as high risk. So You have those two sides, the deep value and the high growth, and both of them this week kicked off like crazy. So when we look at the IWM this week, it was up 6.44%, broke out above this level right here, which was its first resistance level. And it's incredible because you had it break out when there was no stimulus. And you would think that smaller cap companies would be more dependable on, or I'm sorry, dependent on a future stimulus bill or something like that. But in fact, it just seemed like they had the most juice in them, and frankly, they benefited the most from, I don't know, just momentum itself, because people seem to be ignoring the stimulus deal maybe not coming to fruition, or maybe there's just a lot of optimism in this piecemeal deal that's like a third of what was expected in the full package stimulus deal. I don't know. But whatever the case may be, sometimes you cannot fight it. Even though things don't make sense, as I said before, prices really don't match logic. You had IWM probably have one of its best weeks, definitely in, this is a good week too, but I think this is that was a good week too. I guess so, but maybe his best week in a month or so. And everything was hitting off. It had broken through short-term support levels easily. It was gapping up every morning. It was outperforming every other index for the majority of the week until Friday. Friday was the first day where I saw that it was just starting to underperform relative to high growth and tech and other areas. But for the most part, IWM has been just a killer actually for the past 2 weeks. Well, I guess you could count 3 weeks because that was the bottom, but definitely for the past 2 weeks, it's just been awesome. And that's really good for that risk appetite that I was talking about. So in my mind, that means that people are feeling risk on, even though there are risks associated with no stimulus bill coming through, or whatever the case may be. There's so many market risks. I don't want to name them all, but even though there's a lot of risks in the external environment, you're still having these risk on assets perform the best. And that's a really bullish sign for me. At this stage, I want to say it's somewhat complacency, but I'm not a total mind reader or whatever. I'm still trying to go off of what I see, and based on what I see, it's still a very bullish sign to me. And as it continued to outperform at the beginning of the week, that was definitely a sign where I was like, okay, this market could still have some upside in it. Even as it opened, even though the market closed bad last Friday, when I saw it open Monday and IWM continued to outperform and do well, I was like, okay, that's really interesting. It was already breaking. It was the first one to break through short-term resistance level. I was like, damn, that shouldn't happen if the market's going to come down. But that's what happens when the market goes up. And we had another fantastic week. But so that half of the risk sentiment / appetite is taken care of. As you can see, IWM really had a strong week. So that bodes well for the bullish sentiment in the market. Now let's go ahead and look at high growth leaders. So Fastly is probably one of the biggest ones right now, and it's insane. I think Fastly is actually a really good company. They're seeing accelerated revenue growth. They're going to be profitable in 2021. I'm not so upset about this one as I am things like Peloton, which I'm short in, and whatchamacallit. Yeah, Peloton is worth more than almost triple of Fastly. That's incredible. But once again, let's just get back on topic. The high growth stocks had a phenomenal week this week. So we could look at Peloton, another big leader that's popped up. Twilio had another great week after its huge week last week where it went up like 20% off of really good earnings. Still was managing more than 5% gains this week. Let me check CRM. One of the big cap growth leaders, up 7%, looking like it wants to test that previous high. Adobe, up 5%. And then let me check Zoom. Zoom was a little bit of a laggard, actually, just only up 2%, but still up nonetheless. What else? PayPal, up 3%. Square up 10%, made a new all-time high. Damn, I mean, just this company, fintech companies continue to be some of the best companies in the market right now, and rightfully so. They have some of the best growth lined up ahead of them. Let me check out Melly real quick. Melly up 11%. So broadly speaking, MongoDB, that's not really a leader, but high growth stock nonetheless. You're seeing a lot of these high growth stocks just have phenomenal weeks. And once again, that paints the very bullish picture for the risk sentiment. That means that people are feeling risky. And once again, you cannot have stocks like this go up 10% and point it all to like Robinhood traders or retailers. No, these are institutions who are buying these stocks like hand over fist, and that's very positive. As far as the short-term momentum of the market, it just feels like, once again, all the factors, at least for the risk appetite, are lining up for more short-term gains. So with that taken care of, I guess we can check that off the list that, okay, at least for the short term, the risk appetite is pointing more towards the upside. People are still feeling risk on. Now that could change at a dime. I'm not saying that's going to continue forever, but that could change at any moment and it'll hit like that. But at least for now, it's definitely looking good. And so let's go ahead and look at the leadership cycle. Excuse me. Let me take a water break. Okay. So now we got the risk appetite part of it. Now the other half of that is the leadership group. So I like to look at a lot of big stocks, leader stocks that are stocks that I consider leaders, to see how they're doing. It's really important, at least in this stage with the market being so extended, that leaders can make all-time highs, because I think it's just a very key factor that I've looked at for a long time since trading the market. And usually when you can have leaders continue to make all-time highs on a broad scale, it's very positive. That means it's not a narrow market, there's broad participation, and that in turn is very healthy. So this week, I'm just going to sum it up for you. We'll look at a couple stocks in a bit, but it was maybe one of the best weeks I have ever seen in terms of leadership all-time highs. Like, you had leadership all-time highs from Dollar General, which is a retail leader, Target, another retail leader. In the industrial sector, you had Deere. Look at that, damn. Cat. Oh, I guess Cat made a 52-week high. Oh, that's my bad. But still, 52-week high is not bad. Nonetheless, it broke above a really nice support level. Got some more, got some more resistance levels there. But once again, that move was very powerful, very strong. Let me see. Tractor Supply is another. No, it didn't make an all-time high. No. Okay, I guess Deere was probably the biggest one. UNP made an all-time high this week, which is arguably not only one of the biggest industrial companies that I look at, but they're largely they're considered a transport company, but I like to lump transports and everything into the industrial sector. And this is the most important stock that I watch in regards to all industrials. UNP is the biggest railroad company in the US, and their performance dictates a lot on how the flow of goods is going in the economy throughout the country. And when they're doing good, that usually means the economy is doing good. At least goods and services are being bought and sold, and everything's working fine. And so for UNP to make an all-time high this week, that was a huge sign. And look at this. I mean, consider this company is still losing money this year. Like, they had a 25% drop in earnings in June, 24% drop in revenue, and they're actually expected to slump 6% in earnings for the overall year. Now, granted, they're going to be making $9.32 in 2021, but I don't really know what those estimates are based on, because with railroad companies, it's a little bit different. It could be, we could have a huge consumer crisis if there are no stimulus checks, and then goods are not going to be ordered, inventories are not going to be restocked, and ultimately railroads will not be, their services will not be used as much. So I don't know what's baked into those estimates. They seem really lofty and really nice, but I mean, honestly, if it can make that $9.32 next year, then this is rightfully so. Then this stock deserves to be hitting an all-time high this week. So that was from the industrial sector. Let's go ahead and check out healthcare. UNH, big UNH, made an all-time high this week, growing very nicely. I've been saying for a while, these companies are, give you some of the really steady earnings growth and and accelerated growth rates. And once again, it kind of, they're not as volatile as the tech stocks. They're not going to give you as much, but once again, they kind of make all-time highs close to the same time. So United Health was one. I think Danaher made an all-time high. Yeah, Danaher is a medical device company. Very huge. Actually, they're a diversified medical company. Actually, they're just huge in general. You can't even pin them on one thing. But they made an all-time high today. And I believe those were the only two big leaders on my list that made all-time. I don't think Abbott did. No, Abbott didn't. Okay, so healthcare, retail, industrial. What's another one? Comms did not do that good. I know Comms did not have any all-time highs. Let me see Procter and Gamble. Yeah, Procter and Gamble, consumer defensive. Best consumer defensive name this entire year, made another all-time high today. Damn. Wow, $355 billion. Wow. That's incredible. But let me see, GIS. No. Okay. So I guess Procter and Gamble, the only one in the consumer defensive sector to make it all-time high. But once again, I'm not going to go through every sector. I think there are a couple more sectors, but I'm not going to go through them. But you got to get the picture that there was a lot of momentum in the market, and it wasn't just specifically directed at tech. And that's really positive, for the people that were complaining earlier on that this market's only going up because of a couple five stocks or tech was predominantly dominating everything. You look at some of these moves and some of these other names, and it's like, damn, I guess not. Let me check out RSP real quick. This is an equal weighted ETF, S&P ETF. So, in the S&P, different stocks are weighted differently, and whether or not they go up, like I think at least in the Dow, like Boeing and Caterpillar are weighted really heavily, and so when they sink a lot, that'll drag down the Dow. But in this ETF, the RSP ETF, everything is equal weighted, so it's like everything has 1% in the S&P. It's really nice if you want a broad picture, if you want to see if there's broad participation, not so much one sector powering through above everything else. But anyways, RSP, let me see if it broke above. No, it didn't. Okay, it's still at that's kind of that's a little bit of a warning sign. But ultimately, when you still see all-time highs in the individual stocks, you have to think that at some point this ETF will break out. But once again, you got to see it. Just something to keep in mind for this week. Keep an eye on RSP breaking above that 1445 level. That's actually really important. But anyways, this market looks broad. Bottom line, the breadth has expanded a lot more than I ever thought it would, given all the risks and negatives in this market. It's just been, honestly, it was a golden week. And I hate saying that because I was short coming into the week. It was actually one of the best weeks I have seen for the market, like maybe ever in a lot of my years of trading. I don't know if I've ever seen something where the risk appetite sentiment went up so much, and on all levels. And then you also had broad participation in leadership, not even associated with the risk appetite sectors. And I'm not even talking about tech. You're talking about retail, industrial, healthcare. You had all these all-time highs being made in the other sectors of the market, and you have to think to yourself, damn, like the momentum just seems so strong. And honestly, like it kind of seems dumb to be shorting, and that's someone, I'm short. I'm like 80% short right now. And for the most part, I'm willing to wait out because I believe in a theory that goes beyond just week by week. But if I'm a trader week by week, or a day trader, definitely I would not short this market. Like, just try and pick your best stock to try and buy long, and hopefully you catch a nice move to the upside, because shorting this market just seems really bad at this stage. And ultimately, like I said, anything could change on a dime. There's some news that could hit the market that may not seem that big, but ultimately, if the market sells off hard on that news, everyone will take that into account, and once again, price will change sentiment on that news, and that news will become big. But I thought we were going to get it with the stimulus deal being pulled out. Apparently not, and that itself, climbing that wall of worry is a very positive sign in itself. I can't be more positive on this week. Like, it was really just a fantastic week. And I think if you're a bull going into next week, it really, you got to feel good. I don't know if you probably ever felt better going into a week than after what we saw this week. Um, but anyways, I guess that's a good lead on to my next topic, which is what is going to happen this week. So, I mean, just based off the momentum that we got from the broad market last week, it's looking like it's going to continue. Like, there's no reason for it not to continue, and I think that you could point to a little bit of signs, like they're very minor signs that, like the IWM starting to look like it's stalling out, even UNP a little bit. I checked on the daily scale on my very short term momentum uh, technicals. It's starting to look out. I don't know if you can see it on this one. It's starting to make a yeah, this kind of triple top thing it's not really a big deal, but considering the stock is right at all-time highs, I want to point y'all to something. Um, when this UNP peaks, it's usually the sign that the market is going to fall fairly soon after. So what I'm saying is, so let's just go ahead and look at this peak, 188.96. That was on 124. Okay, 124, y'all know that pretty soon after, this thing kind of stalled out, and pretty soon after the market ended up falling from the correction. I guess that's not really a good example, but let's go ahead and take out this one, 187.83. This is a pretty high peak. Okay, where the market had seemingly gapped up, went close to resistance level. It's actually, yeah, it went right at the resistance level, probably pre-COVID resistance. And then let's see what happened next. So that is 6.5. 6.5. Okay, so right here. And then pretty soon after you get that steep, I remember that day, that steep 1,800 point sell-off very soon after. And 6.5 was right here. That was the peak of UNP, and then it started to drop, and then you saw it carry over into the broad market a couple of days later. Now let's go ahead and look at the next peak. Is that no? That's kind of a up move and consolidation. That's not a peak. This is a peak. Okay, so 916. I believe that was the tech sell-off. I believe so. No, it was not. The tech sell-off was at 9.2, but 916 was it was the second leg sell-off down here. Interesting. All right, let me see about UNP doing 9.2. Okay, it's whatever. I guess this is kind of a toppiness, but that's not really going along with what I'm saying. So I don't know if I'll count that. I don't think I will, but definitely when UNP starts to peak at very high levels, and I don't know if we're there yet. I feel like I'm seeing something on the short term, but we'll see. This is a very minor sign. This triple top right here, it's, you could point to right here and say this is a triple top too, and ultimately, it sold off right there. But look at it, gapped up right there, and it's seemingly holding above that level. So anyways, there's small signs that'll indicate to you that maybe we're in a slowing down phase in regards to the momentum in leaders like UNP or IWM. But overall, I wouldn't value them as much. I mean, the positive signs outweigh the negative probably 90%, 95% to 5%. So ultimately this week, I'll probably be going over this weekend. Definitely, I'll probably be going over my long book and hopefully trying to figure out what I can still buy this week that looks good. There was one purchase I did make this week. It was the only buy I bought in like a month, or no, I'm sorry, since the Facebook DHI and Eli Lilly type stuff, and it was Futu. Futu is a high growth company. It's a Hong Kong based trading platform. It kind of reminds me of the Robinhood, but for Hong Kong. For my U.S. people, y'all know what Robinhood is. Actually, for everyone, I'm pretty sure a lot of people know what Robinhood is. But anyways, Futu is basically the Hong Kong Robinhood, and they've seen just amazing growth. And I remember reading the company report when the stock was at, I believe, like $17, And I remember thinking to myself, wow, I don't know another company that's seeing this type of acceleration. And then I kind of compared it to what I was reading on the news about Robinhood, about how there were so many accounts being opened up and all this stuff. And I was like, okay, if the trend of like active passive investing, just the trend in investing in general is increasing over here, I have to think somewhat that trend could continue in other places of the world. Now, I'm not too sure. I'm definitely like not going to act like I know what's happening in Hong Kong, but just from human psychology basis, their market was going up as much, and I would probably assume the participation would want to go up too. Everyone felt like they were getting a deal when the market was down below pre-COVID highs, and ultimately it just felt like that that feeling led to a lot of accounts being opened, and I'm sure in TD Ameritrade, Charles Schwab too, but definitely these smaller firms like Robinhood and Futu. And so I remember reading the conference or the earnings report, and them talking about just extreme growth, just extreme adoption. I think last year in 2019, they had only 1% of the market, or two, three, I think under 5% of the market. And this year they had 20% of the market. That type of, and that's not even in terms of earnings. That is pure adoption of a product. And when you see that happen from one year, that's incredible to me. That not only gives you the chance to make money extremely fast, but now you have this sort of product that you can optimize and increase your dollar per spend, for a much larger base. And I think they're still in the early infancies. There's a lot of things you can do as far as increasing the dollar, how many dollars are spent on your app, especially for something like this. I think their margins are probably going to increase, especially if this app has the same hold that Robinhood does on its user base. Well, I have yet to use the app. I'll be honest. I really don't like that I haven't used the app. I've tried to get some information on it, just about how everything goes about, but ultimately, in this stage, I have to trust the numbers and just the pure adoption rate, and hope for the best, because this company is backed by a lot of big firms. BlackRock Investment, which is one of the biggest investment firms in America. They're backed by some other big guys too. So, you know, being a Chinese company, there's always that risk that it could be somewhat fraudulent, or the accounting practice could lead to the stock tanking, like we saw in Luckin Coffee or whatever. But when you're backed by those big dogs, I kind of have to assume that they've done their homework, and so they're somewhat of a safer asset. But once again, this was the only stock I ended up purchasing this week at, I think, around $29. It went up nicely, along with the rest of high growth. How much did we go? Oh, 16%. I don't think I got all that. I think it was okay. So it was around, I think I'm up like 9-10% on it, but damn, 16% in 1 week. Once again, high growth, just phenomenal. Just so much buying, it's incredible. Um, but like I said, this was the only stock that I ended up purchasing. So if you guys are looking for any ideas, um, as far as what to look out for, this was just something that I had on my eye. I want to keep it for a long run. I'm sorry, for the long run, and probably for a good 3 to 6 months, because I still believe in this trend of this increasing trend of market participation from a broad audience, from young people to old people, everything. I think the news and the allure of making money fast and everything has become so mainstream. And I think like everyone knows someone who has had a hit on a stock at this point, like had a stock that's gone up like 30, 40, 50% in like a month, even sometimes 100, 200% in 3 months, 6 months. So when you have that allure still in place, and things haven't crashed yet, I want to believe that you'll continue to see that adoption rate increase and not decrease, because once the selling starts to kick in and people start to get afraid, then I'll assume that the adoption rate will slow down, because people don't want to participate as much. But as long as things are humming, I still think that you know this is a really good play to be in. So take an eye out on that. That's pretty much the only long. Oh, and Dynatrace was one that I was mentioning throughout the week. I really like this company. Not growing as much on the revenue side as much as the other high growth stocks, but one of the safer plays, I think. Making 57 cents next year. They're already profitable. They're in a very nice business. So I implore y'all to go ahead and check out those companies if you're looking for any type of long investment. Once again, this is not financial advice. These are just my opinions. And then, yeah, I should probably have more to talk about as far as the long side Sunday when I get on a call with Hummel, because like I said, I've been short heavy. I've really not been wanting to buy anything, but just based on how the week closed, I think it would be foolish of me to not do some of the long side work, at least on this stage. Even if I'm not going to actually buy anything this week, I think I definitely have to be prepared. So I'll probably have some more long ideas tomorrow for y'all, more so than now. But anyways, I hope this was somewhat helpful and somewhat useful in terms of understanding just what happened this week. I hope you all have a great October 10th Saturday. I hope it's as beautiful as it is in Houston now. But as always, take care, and I hope to see y'all tomorrow. Peace.